About 2 weeks ago, there was an article in the Wall Street Journal that was talking about the fact that a lot of businesses, a lot of small businesses, were actually looking for low doc and no doc business loans because they realized that no business is really willing to provide, let's say, a gazillion of business paperwork just because they're trying to get a loan. So into this conversation, I want to really break it. I want to break down things for you. I want to explain to you, how do you actually get a business loan if you have fair credit and you're looking for a no doc, low doc business loan? So here are the steps I want you to follow right now. And so first thing first, everybody wants to have a no doc, low doc business loan. I mean, it sounds very nice, sounds very appealing, right? No doc business loan. But the question is, what type of loan are you looking for? Let me give you an example. If you're trying to buy a piece of equipment, you're trying to buy a business vehicle, it's not really a low doc or no doc business loan. Why? Because the vehicle will have some kind of information attached to it. So the lender will have access to that information. The same thing applies if you are looking for, let's say, accounts receivable financing. You're going to have to provide to the factor, to the accounts receivable company, information about your customers, right? So the level of information that you have to provide depends on the type of loan that you are going after. So my question to you is, are you looking for a loan just to go by in terms of your payday, your regular payday, your regular payroll, your operations, your working capital, like you're trying to sustain, to maintain a decent working capital? Or are you looking for a loan to expand? Let's say you have a business and you are looking for extra cash to expand. In other words, you don't want to tap into the operational cash flows that you currently are generating, because this will actually disrupt your liquidity. So you want to borrow to finance that expansion. Or you're just looking for cash for inventory. You want to buy, you want to seize an opportunity, a great opportunity, because a supplier, a vendor is offering you, say, 30% or 25% or 50% off if you buy this amount of inventory from them. So there are a lot of things that actually will decide the type of loan that you need. So big decision time, boss. If you are looking for a business loan, fair credit, no doc, low doc, what type of loan are you looking for? Write it down, because this is going to be very important in the remaining part of this show, because depending on the type of loan that you are going after, you're going to have to think about the lender and also the eligibility requirements. Welcome back to the show, boss. It's really a pleasure to have you here. And so if you are trying to have a no doc, low doc business loan with fair credit, number one, after choosing the type of loan, you need to actually decide how much money you need and how much you can afford to borrow. Those are two important things, and those are two different things. The amount of money you need has nothing to do, absolutely nothing to do, with the amount of money you can afford to borrow. So, for instance, let's say you need $100,000 to take care of business, literally, like to pay vendors, to make payroll, to finance a series of things. But given your current levels of cash inflows and cash outflows, you are not able to afford $100,000 on your balance sheet, because that $100,000 will actually equate to $3,000 or $4,000 monthly payments, and you may not be able to actually make those payments, which means what? It means that you will default. This is why it's really important to have this dual analysis, to have this hybrid analysis, to look at how much you need and how much you can afford to borrow. How much you need is your inflow of cash, your cash inflows. How much you can afford to borrow is your cash outflows. And those two elements are part of the statement of cash flows. And this will play an important role not only in your liquidity overall, but also in when it comes to your business credit score and your personal credit score, for that matter. Okay, so I want you to be very careful here. Depending on the type of loan that you choose, make sure that you are very strategic about the loan amount. Loan amount, boss. Don't be greedy here. Okay, it's not about being a greedy ass because you can be a greedy ass. You get the cash now, you can't repay it. You can't repay it, and then you start playing games with the lender. You start ghosting them, and they're trying to chase your ass all over the place. Don't do this. You want to be conservative here, monetarily speaking. So money, boss. How much do you really need to actually finance your operations? How much you need to take care of business, literally? I want you to write that down. So first you wrote down what you needed the money for. Now you have to write down how much money you really need. Now, the third thing I want you to do here is I want you to actually determine your eligibility. But before we do this, let me quickly remind you of today's topic so everybody's on the same page. So we are talking about business loans, fair credit, no doc, low doc. How do you actually apply properly and apply successfully? Okay. And one thing that's very important to understand here is that people sometimes say, well, there's no such a thing as no doc business loan. There is. You have no doc, no documentation business loans. But when you have those loans, you have to connect your bank account, your business bank account to the lender's systems, and or you have to connect your accounting software, your QuickBooks, your Xero, your Wave, and whatnot. You have to connect that to the lender's system. So those are the pure no doc business loans. Or in some cases, if you have an accounts receivable financing arrangement, or if you have an equipment loan, for example, you don't have to provide any documentation, again, because the assets that you're financing, because you are using an asset, either a piece of equipment, a fixed asset, or accounts receivable, a short-term asset, to collateralize the loan. So the lender needs no more guarantee from you. Okay, so you have those. You also have the low doc business loans, whereby the lender is asking you for like limited paperwork. They can ask you for your annual revenue, for example, your P&L. Okay, so they can see exactly whether you're just banking, monetarily speaking, or you're just scraping by. They'll ask for your time in business. So when we talk about low doc, no doc business loans, business longevity becomes of quintessential importance. It becomes paramount, because the lender has to actually assess whether or not you will be here like 1 year from now, 2 years from now, 4 or 3 years from now, right? Those are conversations that lenders and underwriters, for that matter, are constantly contemplating. It's called risk mitigation. Okay, risk mitigation is really important. So, and the lender also wants to, when we talk about eligibility, the lender wants to make sure that you have a decent credit score. Okay, don't forget, if you have bad credit, you could still qualify for a business loan, but the higher the better. We all know this anyway. Okay, so, and also think about your debt to asset ratio. I'll talk about debt to asset ratio in another show, but yeah, this is important. The fourth thing I want you to do here is, if you are trying to get a business loan for fair credit, no doc, low doc, you need to be in a situation where you can compare lenders. Now, when we talk about comparing lenders, you can actually do things manually, or you can do things electronically. So manually, for example, there are 3 ways. You can do it manually by yourself. Okay. You can do it electronically, and you can do it through a broker. So you have business loan brokers who actually will introduce you to business lenders. Okay. Now, the easiest part is to actually have a platform. So you do the vetting process. You actually conduct everything electronically. So you actually outsource the comparison to a third party, ideally an electronic platform such as Lendio, such as NBC, National Business Capital. So those are usually those two, and there are many more though, but those two are pretty great because they actually aggregate several business lenders who are actually vying for your business. They're fighting for your business. Okay. For example, Lendio has 75 plus lenders in their network. And NBC, National Business Capital, has also a similar, and you might have duplicates. You might have lenders who actually play on different turfs anyway. I mean, listen, it is fair game. So you can compare lenders also using a broker. So you can have a broker such as Fundera. So Fundera, which is a unit which was bought over by NerdWallet, they will facilitate they'll actually put you in contact with the lenders. So this is really good. And the third option is you do things yourself. So you actually say, you know what, I'm going to write down all the lenders in whom I'm interested in. I'm going to write down the lenders whom I'm interested in. Okay. And you start going one by one and see which one is better. So you look for things like APR, how much they're charging in terms of APR, how much they're charging in terms of the fees. Okay. Because there are some fees. Sometimes you have draw fees, you have closing fees, you have administrative fees, you have prepayment penalties and whatnot. So you do have a diversity of fees that you need to be aware of. And you also got to think about the reputation of the lender. If you do things yourself, you got to do some due diligence to make sure the lender you are ultimately choosing is legit, right? Because the last thing you want is to actually associate your ass with a lender who actually is of less repute. Okay, a lender who is of little repute. You want to be sure that the lender is going to be around for a while anyway. The next thing I want you to do here is to gather documentation. By the way, I want to quickly remind you of today's topic. We're just having a quick convo about low doc, no doc business loans, fair credit. What are the hacks? What are the strategies? What are the tips that you need to apply right now to make sure that you get the loan that you want very fast and very easily too? One thing I want to say here is that when we talk about those types of loans, you need to actually be very clear in terms of the documentation. Okay. And there are some staples. When we talk about the paperwork you need to provide to a business lender, there are some staples. There are some documents that are static, and they have been static for 100 years. I guarantee you, during the Great Depression 100 years ago, lenders were asking the same thing that they're asking today, because there are some elements that are never going to die when it comes to business lending. Number one, the lender wants to understand whom they are talking about, whom they're talking to. That's why they ask you for your personal documentation. They ask you for your information. They want to check your credit score. They want to check those things. They want to see your financial viability, like personally. The lender wants to have information about the business. That's why they ask for a business plan. Okay, that's why they ask for business financial documentation. In other words, they want to make sure the business is financially viable. Again, we are going back to monetary viability. We're going back to pecuniary viability. We're talking about economic viability, what some accountants, some experts in accounting call going concern. Your going concern is your ability to survive 1, 2, 3, or 4 depressions or recessions or whatnot. And the third thing that lenders are concerned about, they want to know more about the legitimacy of the business. Is the business legit? What are the contracts that are actually binding the business right now? Like, should something were to happen, if push came to shove, what will happen to the loan, right? So those are important elements. So the next thing you want to do here is you want to apply for the loan. Like once you have identified a no doc or low doc business loan that is accepting fair credit, you need to actually apply for that loan. One thing I have to tell you right away is that it doesn't matter whether you are, like, it doesn't matter your geography, whether you are in New York or Georgia or California or Nevada or whatever. The applying for a loan, the type of loan we're talking about, you're not going to get it through a regular bank. You're not going to get it through a regular credit union. No doc, low doc business loans, no, you don't get them through traditional lenders. Okay, it doesn't matter if let me qualify this. Maybe if you have a local credit union and you happen to have a strong relationship locally with all the managers, maybe they can do an exception, but that's pretty rare. In the last 35 years, our team has only seen this 13 or 14 times. 35 years. So generally, when we talk about business loans, fair credit, no doc, low doc, you are speaking about two specific animals who love this type of games, who love this type of loans. You have online lenders and you have alternative lenders. Sometimes they could be the same category, but usually for our analysis, we separate online lenders such as Blue Vine, for example, such as On Deck, such as Cabbage when they were independent before being bought over by American Express. We separate that category from the pure online, but from the pure alternative lenders. Some alternative lenders, they really love risk. They'll charge you for it though, but they love risk a lot. So it's important to understand that you can only get those loans from those two categories. Okay, and so it might take like 1 day to actually close. Sometimes it will take more than 1 day. It really depends on the lender. So one thing I want to say here is that you have to be patient, and it's a lot better to actually contact the lender first. So instead of doing everything on their website, contact the lender, talk to them. If they have a physical location and they allow you to have an appointment with a loan rep, go to that office, because alternative lenders and online lenders, they're not set up for brick and mortar transactions like banks and credit unions are, right? Because they want to conduct their business online or over the phone. So just ask for permission before actually showing up at their offices. So big decision time. Are you ready to apply for your loan? What kind of loan are you looking for? What kind of alternative lender or online lender have you identified as suitable for your business? Talk to me about that. So the bottom line here is what, boss? So we, I have actually touched on a lot of topics, from business loans for fair credit, no doc, low doc. How do you qualify? How do you apply? It's really important to understand that there's no income level to actually derive before you can apply for a business loan. It's all about your ability to repay the loan. See, the lender is going to look at how much revenue you are generating, in addition to how much money you currently have, right? So when we talk about liquidity analysis, when we talk about the lender looking at your financials, the lender is going to look at those two elements: how much money is coming in. So that's your I would say your periodic cash inflows, and they'll also look at your cash outflows, but they'll look at your beginning cash balance. Okay, so those are really important. So pay attention to that. Pay attention to your credit score, your personal credit score. You can get a business loan with a credit score of 500, of 600, of 700. Yes, if you apply properly. And applying properly means that you are constantly paying attention to two pieces of documentation: business plan and financial projections. If you are a startup, you have financial projections. Even if you have an existing business, you need to have financial projections in addition to financial statements, your actual data, right? What is the beauty of a projection? A projection is painting the picture you want to paint about the future, and you share that picture, that financial picture for that matter, that numerical picture. You are sharing that with the lender. So this is really good for you, right? So this is why we advise our clients all the time, and our viewers for that matter, to constantly prepare financial projections. This is really, really, really quintessential. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about business loans, fair credit, no doc, low doc. How do you actually qualify and apply successfully? So you have to choose the type of loan, decide how much money you need, determine your eligibility, compare lenders, okay, gather documentation, apply for a loan, and actually look at a few other things in terms of your credit score also. Thank you. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.